Welcome to all who are watching this video. The purpose of this video is to provide you with relevant information on GST registration so that you can make a well-informed decision on whether to register for GST voluntarily in view of the GST rate hike. In this video, we'll bring you through an introduction of the GST rate change, how to qualify for voluntary GST registration, factors to consider for GST registration, benefits and costs of being GST registered, other factors to consider before registering for GST, accounting software and invoicing system, when to register for GST, and how to register for GST. This video will take about 45 minutes. If you are watching this video for the first time, we encourage you to watch it from the start to the end. For repeat users, you may go directly to specific topics that are of interest to you by viewing this video via YouTube and click on the selected topic timestamp found under the video description. In the 2022 budget statement, the Minister for Finance announced that GST would be raised from 7% to 8% with effect from 1st January 2023 and 8% to 9% with effect from 1st January 2024. The revenue from the increase in GST will go towards supporting our healthcare expenditure and to take care of our seniors. In view of the impending GST rate hike, you may be concerned about higher business costs. Since GST-registered businesses are able to claim the GST incurred on their purchases, you may be wondering whether you should register for GST voluntarily to mitigate the increased business costs. Before registering for GST voluntarily, you should consider these three factors: whether you qualify for voluntary registration, whether the benefits outweigh the costs of registering for GST, whether you can meet the conditions imposed for voluntary registration. First, to qualify for voluntary registration, your business must make any of these types of supplies. Taxable supplies refer to both standard rated supplies and zero rated supplies. Standard rated supplies include the supply of all goods and services within Singapore, except for supplies which qualify for zero rating and exemption. For example, the sale of aircon repair services in Singapore is a standard rated supply, which is subjected to GST at the prevailing rate. Zero rated supplies apply to the export of goods and the provision of international services. You may zero rate your supply of services if it falls within the description of international services under Section 21(3) of the GST Act. If your business does not make taxable supplies, you can still qualify for voluntary registration if your business makes exempt supplies of financial services that also qualify as international services. You can also qualify for voluntary registration if your business makes out-of-scope supplies, which would have been taxable if made in Singapore. You may also qualify for voluntary GST registration if your business procures imported services from overseas service providers, and you would not be entitled to full input tax credit even if you were GST registered. Businesses that would not be entitled to full input tax credit are partially exempt businesses or organizations with business and non-business activities. For example, charities and voluntary welfare organizations that receives outright grants, donations and sponsorship, and provide free or subsidized services will not be entitled to claim 100% of the GST incurred on their taxable purchases. This is because part of the purchases is for non-business activities. Only GST incurred for business activities is claimable. Another example of entities that are not entitled full input tax credits are investment holding companies that derive mainly dividend income. Since dividend income is not a taxable supply, such companies will not be able to claim input tax on their purchases in full. Once you have established that your business qualifies for voluntary GST registration, you should weigh the benefits and costs of registering for GST. On one hand, you can benefit by claiming the GST incurred on your purchases if you can satisfy the conditions for claiming input tax. On the other hand, you will incur compliance costs to fulfill all the obligations of a GST-registered business. The right side of the weighing scale summarizes the costs of being GST-registered. I will further elaborate on these costs in the later part of the video. Let me bring you through some examples to illustrate the benefits of being GST-registered. In example 1, a non-GST registered company purchases goods or services from a GST registered supplier and then supplies the goods or services in Singapore. The company incurs GST on its purchases, which it is not able to claim. There is no GST chargeable on its supplies, as the company is not GST registered. Let's compare a similar scenario, except that the company is GST registered. In example 2, a GST-registered company purchases similar goods or services from a GST-registered supplier at a purchase price of $700. It also incurs GST. The GST paid by the company is termed as input tax. The GST-registered company can claim the input tax if it satisfies all the input tax claiming conditions. Subsequently, when the GST-registered company makes a local supply of goods or services, GST is chargeable on the selling price of the supply. The GST collected from the end consumer is termed as output tax. The GST-registered company will report its input tax claims and output tax collected in its quarterly GST F5 returns. The total input tax paid by the business on its purchases will be deducted from the total output tax collected from its sales. The difference, called the net GST payable, is what the GST-registered company will pay to the Comptroller of GST. In this scenario, the gross profit of the GST-registered company, at the same purchase price and the same selling price, is higher as compared to the non-GST registered company. In example 3, a GST-registered company purchases goods from a GST-registered supplier and exports the goods. The GST-registered company can claim the input tax incurred on its purchases if it satisfies all the input tax claiming conditions. When the GST-registered company exports the goods, it can zero-rate its supply since it has custody of the goods to be exported, it controls the export arrangement, and has all the required export documents to support the zero rating. No output tax is collected in this case. The net GST refundable from IRAS would be the input tax incurred on the company's purchases. As compared to the non-GST registered company in the earlier example, the GST registered company is earning a higher gross profit. We have seen from the examples earlier that GST registered businesses can claim the input GST incurred on their purchases. However, the GST registered business must meet all these conditions before they are able to claim the input GST incurred. Condition 1. The goods or services must be supplied to you. For imports, the goods must be imported by you. Condition 2. The goods or services must be used or will be used for the purpose of your business. GST incurred for non-business activities are not claimable. Some examples of non-business activities are activities conducted for philanthropic, religious, or political purposes, and free activities without commercial reason. If you engage in both business and non-business activities, you can only claim the portion of GST attributable to the making of taxable supplies arising from business activities. Condition 3. Local purchases must be supported by valid tax invoices addressed to you, or simplified invoices at the time of claiming the input tax. You are allowed to use a simplified invoice to support your input tax claim if the total amount payable, including GST, does not exceed $1,000. If you do not have a valid tax invoice to support your claim, you should approach the supplier to obtain one. Otherwise, you will not be able to claim the input GST incurred on your purchases. We will elaborate on the requirement of the tax invoice in the subsequent slides. Condition 4. imports must be supported by import permits that show that you are the importer of the goods. Condition 5. The goods or services must be used for the making of taxable supplies, which include standard rated supplies and zero rated supplies, or out-of-scope supplies that would be taxable supplies if made in Singapore. Condition 6. You have taken reasonable steps to ascertain and concluded that the goods or services were not part of a missing trader fraud arrangement, and the conclusion is one that a reasonable person would have made. What is a missing trader fraud arrangement? Under a missing trader fraud arrangement, a group of businesses would form a supply chain and the same goods would be supplied through the chain. These supply chains are typically managed by a controlling mind who determines the price and date of each transaction. A small profit is factored in each time the goods change ownership along the supply chain, thereby increasing the GST that can be claimed by the exporter at the end of the supply chain. A seller upstream in the supply chain would charge GST on the sale of goods to businesses downstream, and instead of paying the GST collected over to IRAS, the upstream seller goes missing with the GST. Let's look at an illustration of a missing trader fraud arrangement. Adam is a GST-registered sole proprietor. He sells goods to Bobby, another GST-registered sole proprietor, at $200,000 and charges GST. Bobby subsequently sells the same goods to Charles, another GST-registered entity, at a higher price of $210,000 and charges GST. In Bobby's GST F5 returns, he claims the input GST incurred on his purchases and accounts for the output GST. There is a net GST payable to IRAS. Charles then subsequently exports the goods from Singapore to an overseas customer at a higher price of $220,000. GST is charged at 0% since the export of goods qualifies for zero rating. Charles then claims the input GST incurred on his purchases via his GST F5 return. However, Adam, the GST-registered sole proprietor at the start of the supply chain, has run away with the GST collected. Adam is a missing trader. Due to Adam's failure to pay the GST to IRAS, IRAS suffers a tax loss when it refunds the GST to Charles, the exporter. The tax loss to IRAS is the difference between the amount refunded to Charles and the amount collected from Bobby. This is also the amount of GST that Adam has disappeared with. When the missing trader fraud arrangement is detected by IRAS, Bobby and Charles will be subjected to detailed audit and investigation. Bobby and Charles will be notified by the comptroller that the payment of GST refunds, if any, is withheld, since the comptroller reasonably suspects that the transaction is part of a missing trader fraud arrangement. If they knew or should have known that their purchases were part of a missing trader fraud arrangement, their input tax claims will be denied. Furthermore, they will be liable to pay a surcharge of 10% on the amount of input tax claims denied. In this example, there are only two intermediary entities, Bobby and Charles. However, in reality, there could be several intermediary entities to distance the missing trader from the exporter. Crime syndicates would also approach legitimate businesses to be a part of the supply chain, attempting to pass off fraudulent transactions as legitimate offers with attractive business deals that would sound too good to be true. In some arrangements, the transactions only exist on paper and no goods are actually sold or exported. The appearance of the transactions are solely for the purpose of claiming fraudulent GST refunds. Businesses that are at risk of being implicated in missing trader fraud arrangements are often those that have failed to perform adequate and appropriate due diligence checks to ensure the authenticity of the transactions being entered into, or that choose to ignore obvious warning signs in order to earn a quick profit. To avoid facing penalties and having your GST refunds denied, you should be alert and avoid participating in any arrangement that is organized with the intention to defraud IRAS of GST. Now you may be wondering, What steps should I take to avoid being drawn into a missing trader fraud arrangement? IRAS recommends that businesses adopt 3 broad pillars to avoid being drawn into a missing trader fraud arrangement. Businesses that take reasonable steps to assess that the transactions are not part of a missing trader fraud arrangement will not have their input tax claims denied. Under Pillar 1, you should understand the circumstances surrounding the transaction, consider the relevant risk factors, and assess whether there is a reasonable risk that the supply made to you or by you might be a part of a missing trader fraud arrangement before entering into a business transaction. Missing trader fraud transactions often present risk indicators that distinguish them from normal commercial practices. You should assess the legitimacy of your immediate customers and suppliers and the commercial viability of the business arrangement. We have listed some risk indicators here. You should look out for these red flags. You should also assess the commercial viability of the payment arrangement and the authenticity of goods or services transacted. Here are some risk indicators you can look out for. The identification of the risk areas and assessment of the overall risk of the transaction from Pillar 1 should prompt due diligence checks and inquiries. Where there is reasonable risk that the supply is part of a missing trader fraud arrangement, it is in the interest of the business to take appropriate actions or precautions to address the risk identified before choosing to participate in the supply. Examples of due diligence checks and inquiries are verifying the legitimacy of the immediate parties you transact with, verify the commerciality of the business arrangement. We have listed some verification steps you can perform here. Please take some time to read through. Examples of due diligence checks also include verifying the commerciality of the payment arrangement and verifying the authenticity of the goods or services transacted. We have listed some possible verification actions you can take here. For the third and final pillar, businesses are advised to take adequate and appropriate actions and precautions in response to the risk indicators and results of the checks. This includes making further inquiries if the results of the checks are unsatisfactory. Besides being aware of missing trader fraud arrangements, do note that not all expenses can be claimed. There are certain input tax claims which are disallowed under the GST Act. Here are the input tax claims which are disallowed. First, benefits provided to family members or relatives of your staff. Second, input tax incurred on any transaction involving betting, sweepstakes, lotteries, fruit machines, or games of chance. Third, club subscription and membership fees charged by sports and recreational clubs. Fourth, medical and accident insurance premiums incurred for your staff. Fifth, input tax for medical expenses incurred by your staff. And lastly, the costs and running expenses incurred on motor cars, including the purchase of the car, petrol, and parking fees. For these last 3 categories, while the expenses are generally disallowed, there are several exceptions where you may be able to claim input tax. For more information, you may view our webpage by scanning this QR code. We will now move on to talk about the costs of being GST registered. First, if you are a GST registered entity, you will need to e-file GST returns and pay tax promptly. All GST returns must be submitted via My Tax Portal within 1 month from the end of each accounting period. Most GST-registered businesses file GST returns on a quarterly basis. Even if there is no transaction, a nil GST return must still be filed. If you fail to file GST returns and pay on time, penalties will be imposed. For the late submission of GST returns, IRAS will impose a late submission penalty of $200 immediately after the GST return filing due date, and further penalties will apply for every completed month that the return remains outstanding. IRAS will issue an estimated assessment of the overdue GST along with late payment penalties. For late payment of GST, a 5% penalty will be imposed on the amount of tax unpaid by the due date. An additional penalty of 2% per month on the tax remaining unpaid after 60 days may also be imposed. Second, you are required to issue tax invoices for your standard rated supplies to GST-registered customers once you are GST-registered. This is so that your GST-registered customers can use them as supporting documents to claim input tax on standard rated purchases. This is a sample tax invoice. Your tax invoice must include the words tax invoice in a prominent place, your business name, address, and GST registration number, invoice date, an identifying number, for example, invoice number, your customer's name and address, a description sufficient to identify the goods or services supplied and the type of supply. For each description of goods or services supplied, the quantity of goods or the extent of services, and the amount payable excluding GST, the GST rate, the total amount payable excluding GST, and the total amount of GST chargeable, which should be shown as a separate amount, and the total amount payable including GST. If the total amount inclusive of GST stated in the invoice does not exceed $1,000, you may issue a simplified invoice. As compared to a tax invoice, less information is required to be shown on the simplified invoice. For example, unlike a tax invoice, the words tax invoice is not required. You are not required to include the customer name, customer address, and GST breakdown in the simplified invoice. A tax invoice need not be issued for the making of zero-rated supplies or exempt supplies. For non-GST registered customers, you may issue a commercial invoice or receipt. In view of the GST rate increase, if you choose to register for GST before 1st January 2024, you will need to comply with the transitional rules for supplies which span the change of GST rates. You must prepare your invoicing system so that the correct rates can be applied on your tax invoices. Therefore, you should liaise with your vendor to ensure that your invoicing system can reflect the correct GST rates on the tax invoice upon GST rate change. For more information on the transitional rules for GST rate change, you may view our webpage by scanning this QR code. The third cost of being GST registered is the compliance cost involved to satisfy the price display requirements. You must show GST inclusive prices on all price displays to the public. This includes prices shown on all tax invoices, receipts, price tags, price lists, advertisements, and publicity brochures. Prices quoted to customers, whether verbal or written, must also include the GST amount. Businesses that decide to display GST exclusive prices must also display GST inclusive prices. The GST inclusive price must be at least as prominent as the GST exclusive price. An exception is made for businesses in the hotel and food and beverage industry. Due to the imposition of service charge, these businesses may have operational difficulties in displaying GST inclusive prices. For this reason, these businesses can display GST exclusive prices for goods and services that are subject to service charge. However, a statement informing customers that the prices are subject to GST and the service charge must be clearly shown. Businesses that do not impose a service charge must display GST inclusive prices. Failure to comply with price display requirements is an offence that can result in a fine of up to $5,000 for each offence. This column shows an acceptable price display format and one that is not. In the acceptable column, all price displays shows the GST inclusive price. It is not acceptable to simply state $100 plus or $100 plus GST, or separate the GST portion from the price displayed. If both the GST inclusive price and GST exclusive price are displayed, you can bold the GST inclusive price or choose not to bold both prices. However, you should not bold the GST exclusive price only or display in a larger font. This is because the GST inclusive price must be as prominent as the GST exclusive price. Given the upcoming GST rate increase, if you choose to register for GST before 1st January 2024, you are required to update all price displays to reflect the updated GST rate. All of your price tags, price lists, advertisements, brochures, and website must be updated to reflect the prevailing GST rate. The fourth cost of being GST registered is the responsibility to keep proper business and accounting records. The type of records that businesses need to keep include source documents that substantiate all transactions in your business. For example, tax invoices, receipts, import and export documents, purchase orders, and delivery notes. This list is non-exhaustive. Once you are GST registered, you are required to keep business records for at least 5 years. This applies even if you have ceased business or are deregistered from GST. In addition, GST-registered businesses need to inform the controller within 30 days after any change to your business circumstances. These changes include change in business constitution or ownership, change in partners or particulars of partners, setup of new partnership businesses with the same composition of partners, and cessation of business. Upon cessation of business, the GST-registered business must apply for cancellation of GST registration online via My Tax Portal. Lastly, once you are GST registered, you need to charge and account for GST correctly. Generally, a GST-registered supplier has to charge and account for GST at standard rate on its supply of goods and services in Singapore. This is unless the supply is an exempt supply or the supply qualifies for zero rating. When you cancel your GST registration, you need to account for GST on business assets held on the last day of registration if you have previously claimed input GST on the business assets and the total market value of these business assets exceed the $10,000 threshold. Business assets include inventories, fixed assets, and non-residential properties. It is important to note that GST is a self-assessed tax. You must assess your supply to determine whether it is a standard rated supply, zero rated supply, or exempt supply, and apply the correct treatment. At IRAS, we conduct regular and random audits to encourage voluntary compliance. For the submission of incorrect returns, businesses may be subject to severe penalties. Therefore, to ensure that you are compliant with GST laws, you should ensure your employees have the GST knowledge to charge and implement GST correctly in your day-to-day business transactions. Otherwise, you can choose to outsource your GST reporting to third parties like a tax agent or a freelancer. If you choose to outsource, you should ensure that these agents are familiar with the nature of your business and have sufficient understanding of your transactions. If you register for GST before 1st January 2024, you will be affected by the GST rate change. There are transitional rules for the GST rate change, which you would need to know. These transitional rules will apply when one or more of these three events straddle the date of the rate change: the date when your goods are delivered or services are performed, the invoice date, and the date you receive payment. For more information on the transitional rules and GST rate to apply for various scenarios, you can refer to our e-text guide. You can find the guide by scanning the QR code. You should consider these 4 factors when performing the cost-benefit analysis. Let's look at them one by one. The first question you should think about is, what is the profile of your customers? If your customers are mostly GST-registered businesses who can claim the GST charge to them, you may be able to increase your selling price to include the GST chargeable without affecting your sales. In this case, it may be better to be GST-registered. On the other hand, if most of your customers are non-GST registered, they will not be able to claim GST. By remaining non-GST registered, you will be able to charge GST exclusive prices. If you choose to be GST registered, you may choose to pass on the GST to your customer by increasing your selling price to include the GST. Otherwise, you may choose to absorb the GST to maintain sales price. In doing so, you have to treat the sum of money received from your customer as inclusive of GST. The effect on your sales depends on your price competitiveness in the market and how price sensitive your customers are. You should consider market factors in your industry when deciding whether to register for GST. The second question you should think about is, what is the profile of your suppliers? Once you are GST registered, you will be able to claim the GST paid on your purchases and imports if you satisfy all the conditions for claiming input tax. Being GST registered will benefit your business if your suppliers are mainly GST registered or you import a substantial amount of goods. The third question to consider is, what are the types of supplies made by you? This question will be applicable to you if your business is one which only exports goods or provides international services. You may benefit from GST registration because you may be able to claim the GST incurred on your purchases without having to charge GST on your zero-rated supplies. The table here illustrates how your gross profit will be higher after GST registration if you only make zero-rated supplies. The final question you should think about is, can you comply with the conditions for registration? There are additional requirements for voluntary GST registrants. As a voluntary GST registrant, you must remain GST registered for 2 years. You cannot deregister unless the business has ceased. Therefore, you should assess the costs and benefits over a 2-year period before making the decision to register for GST. At any point in time during the GST registration, IRAS may conduct audits on your business and request for information. You must be ready for GST audits. Also, you must complete an e-learning course named Overview of GST and pass the quiz at the end of the course. The acknowledgement page at the end of the quiz is a required supporting document when you apply for GST registration. Next, you must set up and maintain a GIRO arrangement for GST payment and refund purposes. You may be requested to provide a security deposit when registering for GST. The security deposit must be in the form of a banker's guarantee or insurance bond. We will notify you on the amount of security deposit required upon processing your application for GST registration. Now that we have discussed all the factors to consider, as well as the benefits and costs of GST registration, it is time to answer the question: should you apply for GST registration? After performing your cost-benefit analysis, If you conclude that the costs are higher than your benefits, you should remain non-GST registered. Otherwise, if the benefits from claiming input GST outweighs the cost of GST registration, you should register for GST. Should you decide to register before 1st January 2024, you should bear in mind the additional compliance costs arising from the GST rate change. You must prepare your accounting software, invoicing system, price displays, and internal processes so that you can comply with the transitional rules and apply the correct GST rate upon the GST rate change. If the additional compliance costs arising from rate change tilt the scales, such that your overall costs outweigh the benefits of GST registration, you should defer your GST registration till after 1st January 2024. After weighing the costs and benefits, should you choose to register for GST, you may wish to consider using any of the approved accounting software listed in our IRAS accounting software register, ASR Plus for short. We highly recommend the software in the register as they offer features that can help to facilitate your tax compliance and simplify your tax filing process. One benefit of using accounting software is that it can generate tax invoices in the appropriate format. This will help you to comply with our invoicing requirements. Another feature of some of our approved accounting software is the auto-triggered filing reminders. This feature allows you to e-file your GST returns timely to avoid late submission penalties and late payment penalties. Some of the approved accounting software have the automated blocked input tax claim feature. This means that they are able to map certain categories of expenses to the disallowed expenses tax code by default. This will reduce the effort of businesses to manually select the appropriate tax code for the categories of expenses and increase the accuracy of the information. Some of the approved accounting software can automatically generate draft GST returns or income tax returns, Form CS, using tax codes from underlying business transactions. This makes filing via the tax portal much easier for you. Another benefit is the retrieval of certain corporate income tax data, such as unutilized losses brought forward, from IRAS servers to pre-fill your Form CS. Some of the approved accounting software facilitates data archival and restoration. This allows you to comply with record-keeping requirements. Also, some of the approved accounting software authenticates users' identities via CortPass. This ensures secure access to your business-sensitive data. CortPass is the Singapore national identity used for businesses. There are more than 20 accounting software that provide you with the convenience to seamlessly file your GST tax return with the click of a button from your accounting software. This seamless filing feature allows you to fulfill tax obligations more easily and accurately. You can reduce time needed to file and potential transposition errors since there is no need for manual data entry in My Tax Portal. Enjoy digital record keeping. Reduce your compliance costs. Fulfill other adjacent regulatory obligations from the same software. For example, some software also allows the automatic generation and submission of annual returns and financial statements to IRAS. Up to 2025, you may also enjoy extended filing due dates and waiver of penalties for errors in your returns arising from unfamiliarity with the seamless filing function. To find out more about the seamless filing service, please scan the QR code. Here are some feedback from businesses who have benefited by adopting seamless filing from software, SFFS for short. Should you decide to register for GST, we encourage you to adopt SFFS as your preferred filing approach to reap the productivity savings and minimize your compliance costs. If you do not use any accounting software currently, you may wish to procure one to assist you in your GST reporting and to facilitate tax compliance. IRAS's ASR Plus provides a list of accounting software that meets IRAS's requirements. Do note that not all the software listed in our register will have all the features mentioned earlier. You can check out this software register for more information on which software product supports your desired features. You can leverage on the Productivity Solutions grant to subsidize some of the costs to acquire the software. Please scan the QR codes for the list of approved accounting software and check your eligibility for the Productivity Solutions grant. Assuming you have decided to register for GST, due to the GST rate change, you should carefully consider when your business should register for GST. I will now elaborate on the factors you should consider when determining when to register for GST. First, you should consider the readiness of your accounting software and invoicing system. If you wish to register for GST now, you must ensure that your accounting software and invoicing system is able to charge and account for GST at the prevailing rates. We encourage you to reach out to your accounting software vendor early to understand the ease and cost of updating your accounting software and invoicing system. Software vendors may need a few months to support clients, and the time required may be longer for more complex systems where the accounting software is customized for the business. If you choose to register for GST between 1st January 2023 to 31st December 2023, you should work with your vendor to ensure your system can reflect 8% GST from when you are effectively GST registered till 31st December 2023. On or after 1st January 2024, your accounting software and invoicing system must be able to incorporate the new GST rates of 9%. During 2024, your system must be flexible enough to accommodate both 8% GST and 9% GST in the event you need to issue invoices at 8% due to the application of GST rate change transitional rules. Otherwise, you can also choose to register for GST on or after 1st January 2024. In such a case, you should work with your vendor to ensure that your system can reflect 9% GST. Second, you should consider the ease and cost of changing your price displays when you register for GST before 1st January 2024. If you choose to register for GST between 1st January 2023 to 31st December 2023, you will need to update your price displays 2 times and may incur printing costs. You will need to implement price displays to show prices inclusive of 8% GST on your effective GST registration date. Prior to the GST rate change, you should prepare price displays to show the new prices inclusive of 9% GST with effect from 1st January 2024. On the rate change date of 1st January 2024, you have to replace the price displays to show the new rate of 9%. Otherwise, if you choose to register for GST on or after 1st January 2024, you will only need to implement your price display once to reflect the GST rate of 9%. Finally, you should consider whether you want to familiarize yourself with the GST rate change rules. If you register for GST before 2024, you must be familiar with the GST rate change rules, especially the GST rate change transitional rules which apply to supplies spanning GST rate change dates. You may scan the QR codes for the e-text guide, webpage, and FAQs on rate change. In this final section, we will walk you through how you can register for GST. The company director, sole proprietor, partner, trustee, and/or preparer of GST returns will need to complete the e-learning course titled Overview of GST. The e-learning course provides basic knowledge of the GST regime, allowing you to correctly identify the GST treatment on commonly encountered scenarios. It also explains the filing process of GST returns, provides compliance tips, and provides an overview of taxpayers' tax obligations. The e-learning course will take about 4 hours to complete. You can scan the QR code to view the course. You will not be required to complete the e-learning course if you fulfill any of the conditions listed here. Namely, the company director, sole proprietor, partner, or trustee of the business has experience in managing other existing GST-registered businesses. The person preparing your GST returns is an accredited tax advisor or accredited tax practitioner, or the business is applying to be registered under the Overseas Vendor Simplified Pay-Only Registration Regime. Next, you should prepare the documents in soft copy to support your registration application. You will be required to attach supporting documents at the end of the e-application process. The full list of documents required can be found in our document checklist. Here are some examples of the supporting documents required. You may scan the QR code to view the document checklist. Once you have prepared all the required documents, you can proceed to step 3. You can log into My Tax Portal with your SingPass. To log into My Tax Portal, you must first be authorized in CortPass for any of IRAS's digital services. Once you're logged into My Tax Portal, you can click on the GST tab and click Register for GST. We have linked the video on how to register online in the description below. On condition that the form is completed properly with all the supporting documents, we will take about 10 working days to process your application. We have come to the end of the video. We hope that this video has been useful in helping you decide whether to register for GST. Thank you for watching.